Welcome to the All Financial Hour podcast with Steve All.
We are closing in on the final weeks of the year, and time is running out, believe it or not, to make those charitable contributions. But many are shut out of the tax break because they take the standard deduction and they can't itemize. However, people 70 and a half and older, they can take advantage of what's called a qualified charitable distribution. You may have heard it be called a QCD. And tax guru Ed Slott explains on Morningstar.
So the way it works, you're allowed to make your gift directly from your IRA. A direct transfer from your IRA to a designated charity. And normally, when you take money out of your IRA, that's taxable. But this is not. So you're getting money out of your IRA essentially at 0% tax rates. So you're getting and reducing your AGI from what it would have been if that IRA distribution was included in income. And you're still fulfilling your charitable goals. That's why IRAs are the best assets to give to charity.
Interesting. So, really bottom line, anything concerning the IRS and taxes, you want to get it right. So, Steve, is this a tax strategy that you use often?
Yes. I love Ed. I've been to a couple of his presentations and follow a lot of his stuff. And I think he's not a salesperson. He's a tax person. And I think his ideas have shifted tremendously over the years. And it's the idea of we have to look at taxes in the big picture versus just the 1 year picture. And when he talks about the qualified charitable distribution, it is, as he stated, you can't use it till you're 70 and a half. You are limited to $100,000 is the max that you can give through the QCDs right now. But they did put an inflation adjustment into that now. So in 2024, it'll go up to 105. So the people that are more charitable by nature, it does give you the availability to do that. And the big advantage of it is it's not taxed. I'm not giving after-tax money. Because if you're in a 30% tax bracket between your federal and your state, and you want to get $1 out of your IRA account, you have to take about $1.40 out to cover the taxes. And people go, wait a minute, Steve, I only needed $1. Why is it $1.40? Because you have to pay taxes on that extra 40 cents that you took out too, just so you clear that dollar. So people don't realize that. And now, if you're over 70 and a half, then if I want to give $5,000 to the St. Louis Zoo, I can, and I don't pay taxes on it. I think it's one of those very good things that we can use for tax savings in our retirement years. Because as he put, that standard deductions are so high now, most people don't give enough to charities to make that to be a true deduction. People are given to charities because they're charitable. So I think that is very important. Because remember, when it comes to taxes, the Trump tax cuts, the 2017 Act, sunsets at the end of 2025. Folks, we have 2 years left of what could be some of the lowest tax rates in history. In 2025, if Congress does not make the Trump tax cuts permanent, they will revert back to the Obama-era tax codes. And everybody out there is going to take an increase in taxes. So I look at it, reducing or eliminating taxes is the most important thing that you could do to help set up a successful retirement. I think it's the best thing that you can do. If you have too much money in your IRAs and 401ks, I believe that you are setting yourself up for what I call legislative risks in the future. What do I mean by that? Congress can change the rate on what you're going to have to pay in taxes. So we got 2 years left. Roth conversions, do they make sense? I don't know. I have to run a tax analysis to figure out what that is. So if you got too much money in your IRAs, if you got between $250 and $750, an extra large, you might spend that down during your lifetime. If you got a double X between $750 and $1.5 million, there's a good chance that you're going to pass a tax time bomb onto your heirs. And if you've got a triple X, 1.5 or more, you probably will pass that tax time bomb onto your kids. If you'd prefer not to do that, give me a call now. Ask for the tax analysis. Let's sit down and see how you could pay the least amount of taxes over your lifetime, not just for this year.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.